The uprising in Egypt has raised concerns about one of the world's most crucial waterways, the Suez Canal. About 2.5% of the world's oil passes through the canal, and a shutdown might cause prices of oil to rise further. All of this has put the spotlight on shipping stocks. Overseas Shipholding Group is the largest crude shipper based here in the U.S., and the CEO, Morten Arntzen, is here with us right now. Morten, is trouble in the Suez good for shipping companies like yours?
Trouble usually anywhere in the world is good for the shipping industry because it disrupts existing patterns. So were the Suez Canal to close, undoubtedly freight rates would go up and go up very quickly. Unfortunately, it wouldn't be as dramatic as the last two times the Suez Canal closed.
Which is a long time ago, right?
56 and 67. But then most of the crude in the world came west to the Europe and North America. Now 5 times as much goes to the U.S.
Somebody's calling you with an update from Egypt right now.
So, Morten, I actually have a question. I mean, even if you can raise rates and let's just say triple them, I'm not even sure if that's a ballpark. You can correct me if that's not the case.
Number.
Okay, but then obviously the ships have to go a lot further than they normally would have. So how much do you lose yourselves in fuel cost?
The fuel is paid by the charterer, so the shipping company passes that through. So what you would do, you would need more ships because you're going to spend longer time at sea with cargo. The problem is you won't need that many more ships because there's not that much crude oil going through the Suez. It's about 1.1 million barrels per day through the Suez and the Suez pipeline.
The supertanker shipping rates right now aren't particularly high, are they?
They are awful, terrible. So tripling is just moving from awful to mildly acceptable.
That's what the question I was going to ask. People looking at your company and saying, okay, you have a little bit of pricing power in the midst of a crisis. It's not like things are going to be going gangbusters.
Absolutely not. It'll just be, we'll get to a level where we're making some money, but still fairly low returns. Right now, we're in a very cyclical weak.
And the problem here is just way too much tanker capacity?
Way too much tanker capacity and more than anything, weak demand in the U.S. The big problem is there's very little movement to the U.S. When the U.S. has this high unemployment, it's not good for the whole tanker industry or the shipping industry.
So would one of your goals be to get some of these under long-term contract versus spot contracts? I mean, whether we're in a crisis or not.
Historically, the spot market has been the place to be for the big ships. There are periods of time when term contracts work, but if you do any time series analysis, 1 year, 5 year, 10 year, 20 year, the spot market is where you need to be, but you have to be a financially strong company to play that game. We are a financially very strong company, so we can play that game, and we're big. We have 110 ships on the water. We have LNG carriers on long-term contracts. We have U.S. flagships on contract, shuttle tankers on long-term contracts, crude markets mainly in the spot market. We suffer today. We think over time we'll benefit.
Morten, what about piracy?
Piracy is a much bigger problem for the industry. It's growing. It's getting worse. The pirates are getting bolder, more violent. The ransom demand's higher. And it's a problem that's not going away.
Now, if you're forced to divert ships away from the Suez Canal, either overseas, your company, or other companies, don't they run into the hands of pirates pretty much right away?
We have our ships, we're already taking a 3-day diversion to avoid the pirate zone, as well as doing other things, which I really can't talk about. It'll make the problem worse. That means that more ships will have to go down the east coast of Africa. More opportunity for pirates.
Because the shipping lanes get crowded?
It's the only way to bring the oil around.
I see. So here we are. We're seeing the alternatives, right? The blue line is the way to avoid the pirates. Go through the Suez, and the red line.
6,000 miles more.
6,000 miles more to avoid the to avoid the pirates, or to avoid the Suez.
Yes.
I see.
And Morten, I mean, you said you can't talk about all of the measures, so we'll try to respect that. But I mean, do you have to hire independent security teams to help the crew?
If we are coming into a zone where we think there's a high risk of pirate, and that's a measure we need to take, we'll do that. Otherwise, we'll deviate very, very far away.
How much does that cost you? I'm assuming you have to pay big if people's lives are at stake.
It's not inexpensive, and usually we have to eat that cost. But the safety and the security of the crew is the #1 priority for the company.
Also, I mean, not to be crass, but future recruiting. I mean, if a crew knows it's going to be protected when working with your company, obviously it's not going to hurt you going forward.
Safety of the ship and the crew, #1 priority always, and that won't change.
Morten, back to oil for a moment. How closely are you watching the price of Brent?
I follow oil throughout the day, throughout the week, throughout the month, throughout the year. We all do.
How much of an indicator is it for you? What does a higher price of oil mean to overseas?
It's not the biggest indicator. It's more indicator of the economy. It's the OPEC production. It's volume and distance that drive shipping rates. When OPEC is producing more, So if the Suez closed and Saudi had to move 1 million more barrels to make up for that, that would be good for us because it means crude oil moved long distances on big ships.
We have about 5 seconds left, so yes or no, how likely is it that the Suez Canal closes?
We think it's unlikely, and right now it's business as usual for the oil industry through the canal, and expect that the military will be keeping control of that. So we are not budgeting for a bonanza from the canal.
All right, Morten, thanks so much for coming in. Morten Arntzen joining us there. He is the CEO of Overseas Shipholding Group.